And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Hello everyone, this is Ahmed Shawi by Liquidity Club. Today is Sunday, the 13th of August 2023. I'll be doing the weekly review. So let's start with the weekly review. Starting with the DXY, this is the weekly chart. As you can see, we traded and closed above the weekly fair value gap. And now we're reaching to the weekly inversion fair value gap. We took this high and we actually have showed some respect to the mean threshold of this bearish order block, but later on we closed above it. So I'll be looking for if we trade above the weekly inversion fair value gap next week and we treat its high as support that might potentially send us higher to the consequent encouragement and to the buy side liquidity. Going to the daily chart, as you can see, the same thing here, how we traded and took this high. And as you can see, there is a small inefficiency here. We actually left a very small inefficiency here. If you go to your charts and you can see between this low and this high, there's a very small inefficiency that has been left untapped. But we have still here relative equal lows that I really don't like about it. So maybe price by next week would trade lower to the consequent encouragement of this week. We might see some reaction that might potentially send us higher to this buy side liquidity and the weekly consequent encouragement of the weekly chart that I have just highlighted and showed you. So if we trade below the consequent encouragement, I would like to see these relative equal lows to be swept before if price wants to continue going higher, I would like to see these relative equal lows to be swept. Going to the ES, also known as the S&P 500, we have the weekly chart. As you can see, last week we traded and we fell short of this bullish proportional block mean threshold, and we left a very small inefficiency. Now, for me, if we trade above this consequent encouragement, we are most likely going to be reaching to this fair value gap to make it efficient. If we trade below the mean threshold of this bullish proportion block, we're most likely going to be reaching to the sell side liquidity. Why? Because price either go higher to an inefficiency or to a buy side liquidity, or lower to a sell side liquidity or inefficiency. So now, as you can see, we have a small inefficiency in price. So if we trade above, it will act as a springboard. If we trade above the consequent encouragement of this wick, we will most likely going to be reaching to this buy side liquidity, the last week trading, and to this small inefficiency and make it efficient. Otherwise, if we trade below the mean threshold of this bullish proportion block, it will also act as resistance, you would say, as a springboard, and we will be reaching to the sell side liquidity. Now, for me, honestly, I would like to, I'm favoring the run lower, and I will discuss and explain why I have chose that, and I'll be giving you the reasoning behind that later on. Going to the daily chart, as you can see, notice how this is the weekly fair value gap traded. Notice how we traded here after we closed below the weekly inversion fair value gap, which is viewed on this fair value gap. So once we traded below it, it has been acting as resistance, as you can see. So whenever price, as you can see, the bodies are respecting the low of the weekly inversion fair value gap and not going further. This Thursday and Friday. So as you can see, price is respecting the weekly inversion fair value gap. So it's giving us some kind of signatures that it wants to run lower. Going to the NQ, we're using the continuous contract. This is the weekly chart. As you can see here, So now I'll be discussing why I chose the lower move in the ES. As you can see here, we traded and we closed kinda below. We closed below, yeah, the bullish proportion block here. So once we see this signature, so as you can see, there is nothing inefficient here. Price has repriced higher last week and made this potential fair value gap efficient and traded to this bearish order block and traded lower, taking the sell side liquidity. So what's next? Price might potentially trade to this low just to make this area efficient, or if it's in a hurry to reach to lower prices, it might just leave this area unfilled and go lower to the sell side liquidity and potentially to this consequent encouragement of this week. Going to the daily chart, as you can see here, how price has respected the low of the weekly inversion fair value gap. As you can see here, the weekly bearish order block candles, the bodies are respecting it and trading lower. This is the monthly breaker low. If you go to your monthly chart, you can see it. So now we're leaving it. So we swept this low. We have these lows and the sell side liquidity that I've mentioned. Going to the Dow, the weekly chart, as you can see, we're still trading inside the weekly fair value gap. We have this bullish order block, so there's nothing much to be talking about the Dow. It's still indecisive. The daily chart, as you can see, we've been trading in a range and it's pretty much seek and destroy profile. We have created low, high, then we swept the low, we swept the high, and we kept trading in the range. So it's still indecisive here for the Dow. Going to the Euro USD, also known as the fiber. This is the weekly chart. As you can see, last week we traded to this fair value gap and we traded lower. Now we might leave this fair value gap unfilled and we might trade lower to this sell liquidity. Why? Because price has already attempted to go higher to fill it and has failed. So by next week, I'll be looking to perhaps if we trade below the mean threshold of this bearish order block, bullish order block, excuse me. So if we trade below the mean threshold of this bullish order block, I'll be looking for the sell side liquidity, the consequent encouragement and the sell side liquidity. Going to the daily chart, as you can see, we have the relative equal lows here. So price would want to reach for these lows. Also, we have a relative equal lows here. Going to the pound USD, also known as the cable. This is the weekly chart. As you can see, if we consider how we traded here on the pound and we compare and contrast with the Euro USD, you can see that here on the pound we traded and closed below the mean threshold of this bullish order block. So what does that tells you? Everything that is efficient from this high all the way to this low. So there's nothing of kind of like a fair value gap or an unfilled or an inefficient area to be efficient. So price would want to be reaching to this low and to this low, mainly for sell side liquidity. Why? Because there is no liquidity that's resting above. We've swept the buy side liquidity, and notice how we're treating the bullish order block here. This line, we're kind of treating it as resistance that's sending us lower. So this will give me a confirmation that, not just a confirmation, this is a signature on price where it's going to be it's looking like it's going to go lower to reach to the sell side liquidity, because there's nothing in price that it wants to be reaching higher. There's no buy side liquidity and there's no inefficiency. The price would want to go up and make it efficient. Going to the daily chart, as you can see here, the weekly bullish order block, how it was treated as an inversion weekly bullish order block and has acted as resistance that sent price lower. So price is still heavy. As you can see here, there's nothing inefficient. Price has run it up higher to fill some of this inefficiency traded to the consequent encroachment of this fair value gap and kept trading lower. So as I've mentioned, I'll be looking to trade lower. Now for the DXY, if we start trading higher, as I'm anticipating, and we close above the weekly inverted fair value gap, you can rewind the video and you can watch it. I'll be looking for lower prices in the forex market and in the indices. So this will give me a confirmation. And as I've mentioned for the ES and the NQ, as you can see, NQ is acting like the bound. It's giving us more the confirmation and showing us the leadership issue here. So if we really start trading higher on the DXY and we traded above the weekly inversion fair value gap and we treated the high of it as a support that might potentially send us higher for the consequent encroachment and the buy side liquidity, I'll be looking for lower prices for the sell side liquidity in all the markets. And for the sell side liquidity mainly in the markets that I've mentioned, the ES, the NQ, the pound, and the Euro USD. And regarding the Dow is still indecisive. So even if DXY started trading higher, this doesn't mean that the Dow is going to it's going to start going lower, because it's actually the last index that has reached to the buy side liquidity. So it's the last one. So it was the sixth sister. Now the leadership for the downside movement is going to be in the NQ and mainly in the pound, because they are more in a hurry to be reaching to the lower prices. And we've seen this in price, where in the pound, as you can see here on the weekly chart, on the weekly chart, as you can see, we closed below the mean threshold of this bullish order block. But on the Euro USD, as you can see, we're kind of respecting it. So what does this give you? If we actually trade higher on the DXY, this means that price is going to be exaggerated. This pound and the NQ are going to give us an exaggerated moves to the downside. So it will be more profitable and more favorable to be trading the NQ if you're trading the indices, and the pound if you're trading forex, to be reaching for the sell side liquidity and reaching for lower prices mainly. So this was pretty much it for this weekly review. I hope you learned something from it, or you have gleaned something from it. And until I talk to you next time, be safe. Assalamu alaikum warahmatullahi ta'ala wa barakatuh.